Welcome everybody. Going live with this one here. Welcome everyone. Probably one of the most important sessions I'm ever gonna do. All right, so get yourselves in, guys. Get yourselves in. I'm gonna start in a moment. I want to see. I want to see what's going on. All right, welcome everybody that's on. Let's see what's going on in the markets today. Now, this was a much awaited one because I know that it's been crazy. With what's going on. But I want to go through this anyway. And let's crack on. All right. Now, before anything, I would, usually I will go with technicals first, and I will go through the technical stuff. But there's quite a few things to unpack here. So, without further ado, let's crack on. I think I just gave everybody a chance to get in, and let's move. All right. Now, I'm sure some of you have heard the news. If you haven't heard the news, we'll go through it. Now, it's official. El Salvador has now is worded funny here on CNN is worded as El Salvador buys Bitcoin as the digital currency becomes legal tender. So in that sort of, it seems like CNN is quite hesitant towards Bitcoin, but nonetheless, in very simple terms, El Salvador is now accepting and acknowledging Bitcoin everywhere in the country as a legal form of tender. So you can use Bitcoin to pay for things. All right. So the country called El Salvador has done such of that. So let's read this then before we continue. Now, El Salvador has become the first country to adopt Bitcoin as a national currency on Tuesday, kicking off a radical monetary experiment that could pose risk to the fragile economy. Now, President Nayib Bukele announced late Monday that his government had purchased 200 Bitcoins ahead of the El Salvador's formal adoption. He has added another 50 on Tuesday, bringing the country's total to 550 Bitcoin. Bitcoin is now legal tender in El Salvador alongside the dollar. On Tuesday, the risks of the approach were highlighted with Bitcoin prices dropped sharply on what Bukele has called Bitcoin Day, which is interesting. So guys, we've had history unfold right before our eyes. So if you're not too sure, okay, hence the title of today's video. At the same time this was announced, we had a market crash happening at the same time. Now, for me, I think that this timing is absolutely immaculate. And like sometimes when you look at the markets, it's like it's prophesying the future. And the reason I say this is because when we go into the charts and we look at the price points that we've been discussing for weeks on end, you're going to see that the timing of this couldn't have been better as to how the price dropped here. So what we have here, in essence, is Bitcoin has now become legal tender. Now, in other countries around the world, you may be thinking, well, I can use Bitcoin to pay for things. But at the moment, the form of Bitcoin payments or crypto payments that we do is something called non-custodial, which means or through some sort of exchange. In other words, if you want to pay for, now I had a swipe card. I don't know if any of you know swipe. Type in the comments if you know swipe or you use swipe still. But swipe is a non-custodial crypto wallet that has a bank card attached to it. And with this bank card, you actually can pay for things. And what happens is that in the back end, Swipe takes your crypto and at the moment of payment, exchanges that into the equivalent amount on the market in value in dollars or pounds, and then they take their crypto, in other words, from you. Now, I don't know, there was a bit of a breakdown with Swipe. They've changed everything, and so I've stopped using it. But nonetheless, this is what we have primarily for everywhere else in the world. So in order for you to now, you can directly take your crypto, you can take Bitcoin and directly pay for something, Bitcoin to Bitcoin. You don't need anything at all in terms of an intermediary. There's no third party. And this is absolutely powerful because this is what Bitcoin and finance is all about. What we're experiencing right here is the beginning of a new age. And it's going to be very interesting to see what happens in the future. Now, Bitcoin, all right, we will go through it. For those of you who may not know the structure of Bitcoin, we're going to go through exactly what is going on. But a revolution has begun. This day, Bitcoin day, is not by accident. The price did what it did on this day. And so I'm so interested to see what's going to happen in the future. Now, for me, in terms of the price action, which we'll go through the technical side in a moment, I do not think that the shorting is done on Bitcoin. I believe that we have a full-on offensive against everything called monetary system and monetary policy at the moment, by Bitcoin existing as legal tender now within an actual country. And I'm telling you now that they may not show it, but central banks and many other institutions who do not believe in decentralization and power to the people, but rather greedy control, are going to fight Bitcoin tooth and nail. So I'm not going to be surprised if Bitcoin goes to crazy levels that we've never seen or we haven't seen for a very long time, to really kind of discourage people from getting into this, into getting it, or in discourage other countries from trying to, bring the economy into Bitcoin. So I'm going to be intrigued to see what exactly happens. And we're going to go through all of the different pieces of information that we had so far. So next, let's look at the next piece of news here. And I'm sure it's not like me for you to see me start off with news, but I want you guys to have a look here. So here's the next piece of news that happened. So this is from BBC News. This is from a day ago by Katie Silver. Now, Bitcoin crashes on the first day as El Salvador's legal tender. All right, which is very interesting. So here's this story, and I read it already, but I would like you to hear this story just to see the picture of what's going on here and how powerful things are becoming when it comes to the future for us. Now, any angry protesters, technological glitches and a plummet in the value marked the first day of El Salvador's adoption of Bitcoin. Now, I do believe that this was definitely planned. The powers that be knew that El Salvador was about to do what they've done, and they wanted to bring as much discouragement to the market as possible, because the timing is too immaculate that the day that El Salvador officially adopts Bitcoin as legal tender, the market crashes. Now, from a psychological point of view, if you're now El Salvador as a infrastructure of a country is heavily dollar dependent. Okay. El Salvador, many of the poor Latin American countries are countries that are very dependent on foreign aid to continue running. Okay. A lot of family members that leave the country and go to the US because of geography and places nearby, Canada maybe, all right, send money in, which is what helps to support many of the people in El Salvador. Okay, now El Salvador is not the poorest country, but neither is it the richest Latin American country. So a price crash like this, when people's livelihoods now are at stake, is the perfect concoction to kind of get a revolt and get people to say, we don't want this. Now, you just have to think about who planned this at this specific time. I'll leave you guys to think about that, but let's just continue as to where we are right here. So we saw the price drop to nearest its lowest in a month. Literally in one day, we saw a drop of about 30 days worth of price action. So don't you think that's going to cause fear among people? Because in essence, now this shopkeeper, Ed Hernandez, says his store is likely to turn over $1,000 every week in Bitcoin payments. Now, let's say he makes 4K for the month and then Bitcoin crashes the way it just did. So it lost about, I think about 18% or something like that. Imagine you losing $1,000 every month when you're already living a very poor nation. What do you think is going to happen? You're going to revolt and go back to the dollar. And this is what I believe is going on. I believe there's a war between the broken system of money trying to clutch onto the control, and Bitcoin and muscling its way in with a community of people and an amazing visionary called the El Salvadorian president, which I believe we're going to see more of this situation unfold. But anyway, let's continue here. So an opposing politician said that the fall caused one of Latin America's poorest countries to lose $3 million. Now, the rollout of Bitcoin in El Salvador was far from what President Nayib Bukele would have envisaged when he began his bold experiment. Platforms such as Apple and Huawei weren't offering the government-backed digital wallet known as Chivo. And now Chivo means cool in El Salvadorian Spanish slang. And servers had to be pulled offline after they couldn't keep up with the user's registration. Now, Chivo began appearing on more platforms and was accepted by the likes of Starbucks and McDonald's, which is amazing. And the government has even given Salvadorians $30 each of Bitcoin to encourage them to its adoption. It says Bitcoin could save the country's 400 million a year, save the country 400 million a year in transaction fees. Now, transaction fees means third party. And again, we're going to break down the different infrastructures of money that we have in our society to help you to understand what this means. Now, in transaction fees, remember, the economy of El Salvador is very highly dependent on foreign aid and is a very dollarized economy. I'm sure most of their foreign deposits are probably in dollars, or the country's wealth is probably in dollars the most. Now, transaction fees, when we talk about transactions here, I'm going to see if I can draw on I probably can draw over here. But if I was to do a quick drawing just to explain this, all right? Now, when someone has a payment here, so payee. Now, forgive my writing. I'm going to try my best. I'm using a mouse and not touch screen. So let's say we have a payee here. Now, when the payee sends something to the recipient, for us, when we send a payment to someone overseas, specifically, I'm talking about, or even inland to some degree sometimes, nobody ever sees the back end of where the money actually goes to. Because it's so quick or almost instant sometimes, or maybe take a few hours, sometimes you wonder, where is the money? Is it trapped in some sort of copper cable in the middle of the sea, or what's going on? Now, in between payee to the recipient, I should say recipient here. From the payee to the recipient, there's many different processes here, which all equal to something called intermediaries. So intermediaries. Now, an intermediary is just how the name describes it to be. It's someone that's a go-between or the middleman. Now, the industry of the middleman has been in our society since banking, especially digital banking, took hold, especially in the 70s and 80s, and then into the 90s when we had bank cards and things of that nature. Now, when it comes to a payment overseas, all right, for example, if you want to send money from, I'll start with the UK, okay, to the Caribbean. So from where I'm from, Dominica, all right. Although we see the money go directly to the person we're sending it to in Dominica here, for it to get there, it actually goes through more processes than you would think. So for example, maybe it may go to a European bank, and then from a European bank, then it's gone over to the US. And then from the US, it probably goes to the largest bank, maybe let's say in the Caribbean, like let's say, I don't know, let's say, Jamaican bank or something. So Jamaican bank. Now this doesn't even look like Jamaica. That just looks like J. So let's put this here, Jamaica. Put Jam for short, Jamrock. And then it gets to Dominica. Now, all of these parties, now it depends on the route, okay? Now, one of the things about international transfers is that the companies who are responsible, there's many companies who have built a whole business around being an intermediary between the payee and the recipient, where they find the cheapest route from the payee to the recipient to provide this service of international transfer. Now, Bitcoin is revolutionary for any country, but it will be definitely revolutionary for a country that's heavily dependent on foreign aid. For example, Afghanistan. Bitcoin could save Afghanistan, even though there are geopolitical issues as well, and socio-economical issues and things of that nature in the country. But places that are heavily dependent on foreign aid, as they develop, doing transactions in Bitcoin could save a lot of time and money, okay? Because there are no middlemen. With Bitcoin, it's from one wallet to another, okay? That is it. One wallet to another. And this is why Mr. President, and I'll never say his name correctly, but Mr. President Bukele said that El Salvador will save 400 million. Now, the World Bank and the government calculated that the number is closer to 170 million. But to be honest, this line over here doesn't really matter to me, because who cares? The fact that you can save money by cutting in intermediaries. I want you to understand, with this wealth transfer, guys, that I'm discussing here, I'm not just saying it for fun. We're literally seeing before our eyes the transition from one form of economy or one economic system to a new one. We're coming to the age where the middleman doesn't matter anymore. And I can promise you this, that many companies that have built their business on being the middleman are going to either have to change their business structure, get on board with Bitcoin and find a way to make money through that, or they're going to have to close down. And unfortunately, many of them are very resistive and are part of this resistive force against the adoption of Bitcoin. Okay, now why Bitcoin? Why is it so special? Again, I promise you, I will tell you why. All right, but I want you to see here that potentially, if Bitcoin was adopted as legal tender around the whole world, there will be many businesses will shut down almost immediately. Many banks will have to shut down because a lot of them make their money from these international payments. Okay, and this is why we have a war going on Bitcoin. If you've ever wondered why your crypto holdings keep going up and down and you're not too sure why, this is why. Because I know many people liken what we saw with the market crash in 2018, 17 to 18, from the first bull cycle, second bull cycle actually, to and also the crash we have now, to something similar or reminiscent of the internet age, where the internet wasn't adopted as yet. There was a big anti-thesis towards the internet being useless and not helpful. And on top of that, the price crashed. Some internet stocks dropped by 99% when the tech bubble burst in 2000, 2001, during that period of time. And so people liken it to what we have with crypto, which in some aspects is true, okay? But I want to say this to you. The reason why this is even a bigger deal than stocks by a long shot is because stocks is dealing with companies that are trying to bring a solution and a tech piece of technology. However, cryptocurrency, especially Bitcoin, is attacking the top dog, or the hitting the nail on the head when it comes to the most important thing that makes this country and any country run, which is money. Okay, crypto is a direct offense against the monetary system and authority, primarily central banks, which since 1913 have had rulership over what value is, what money is, and of course governments also. Okay, at the moment, governments, central banks can print as much money as they want to. In the olden days, okay, and I'm going to draw this here for you guys. In the olden days, all right, money, okay, so a piece of money, I'm just going to use $1 here. So the amount of currency you had was a representation of the true underlying asset, okay? Paper money or currency was always designed to be a representation of a true asset. It was just an easier way to represent or communicate value. Okay, the true value in the olden days was gold. Gold is the true asset. The reason why gold is a true asset is because of the scientific properties primarily. Gold is the only element, okay, which if you leave it buried 2,000 years ago and you dig it up now, it won't lose any of its luster, or I mean, you clean it and it won't lose any of its luster. It won't lose any value, okay, and it won't change into something or devalue. For example, if you leave gold buried, it's not going to turn from a shiny piece of gold to something like, I don't know, like a bronze color, okay? It will keep and maintain its integrity. All right, so gold is a very good standard to measure monetary value from the past to the future. And I'm saying this in very light terms. I could always go into this in much more detail. If you would like deeper detail, I'll plug this in right here. In the link in the description below, I have a channel called The Wealthy Channel. Click on that channel and have a look at all of my teachings. I've gone into deep depths about this. I have an 8-part series, and I've talked about gold. I talked about gold for I think about 4 hours over 2 lessons. So there's a lot of content for yourself to dive into, but I'm just going to put it here to put this to you so that it makes sense. So what is one of the major properties of gold? All right. Now, gold has scarcity. Now, the reason why gold has scarcity, all right, and you'll hear this term a lot more when you discuss things like Bitcoin. Scarcity is a system, or I want to call it a system, but in other words, scarcity is a property of money that, or should be a property of money. What is scarcity? Is something that is not common. Okay. Now, gold has a theoretical limited supply because scientifically, for every parts per billion, or for every 10 parts per billion, approximately, or yeah, so for every 10 parts per billion, there's approximately, or even if I just say it the other way to help you to understand, on the earth, there's about 3 parts per million of gold, all right, out of 100, all right, in the earth's crust. So there's a limited supply of gold, very limited supply. So if you've ever wondered, why is everybody saying gold is valuable? Why is gold valuable? This is why. Now I'm going to clear all my drawings and do this again. So one of the most important properties of gold, I'm going to say this again, is scarcity. All right. Now, in other words, what does scarcity translate to? That means that there is a known maximum supply. Okay. To a very high degree, scientifically, you can calculate how much gold exists on the earth. Because if you just times the weight of the earth's crust by the 3 parts per million, then you know exactly how much gold is on the earth. With cash, okay, before, and I put this here, before we had central bank systems, cash also was very limited, and it was used to be a representation of how much gold there was. So in essence, if you had an amount of gold, there had to be if you wanted to represent that value of gold, there had to be an equivalent amount of cash to represent that. Okay. And this is the system we had. There was an equilibrium between currency, okay, and money. Now, gold is money, not a currency. Currency is a representation of monetary value. Okay, so for example, in the UK, the pound sterling, although maybe some people don't know, the pound when it was created, the pound sterling was to represent how much silver somebody had. And the term pound silver is because it was weighed to a pound of silver. Okay, that's how they worked out value in those times. So back in the days, many of the banks were a lot different from what they are now. Many of the banks were gold, or the owners of the banks were goldsmiths. Okay, so people used to lock in their gold and silver, which was a bit hard to carry around and etc. And then the bank will issue them a notice or a note, all right, which will be their currency, which will authorize and say this person has to the value of £100, £100 of sterling. Okay. And they could use that note to do transactions, and somebody else could claim their silver at a later date for some transaction that they had, etc. and etc. So this is the system we had. Now that system was broken very early on. Very, very, very early on. And the reason why it was broken is because gold was kicked out of the equation in 1971. In 1971, President Nixon destroyed the gold standard system. In essence, what was happening during that period of time, and you have to understand the economics of it. During that period of time, now if you want to hear this in more detail again, I also have a free course called the Mastermind course. And this is the first lesson of the course, what is money? Okay, because I feel like in order for you to even be a good trader, or for you to understand financial markets, you really have to understand what money and currency is. They're not the same thing. They are related, but they're not the same. The gold standard system that was created, or modified system that we had from just after the World War, so around 1944, we had the Bretton Woods system, which was put in place where all of the US allies, over 700 of them, met together to discuss monetary policy for the future and make a unified system for economy moving forward in the future. And that's what they did. The US dollar became the world reserve currency, and The idea was for gold to be then backed, to be back in the US dollar. So the amount of gold was directly proportional to how many dollar notes were in circulation. But then during the 60s, the space race started. We had the Vietnam War and many other things that took place during the 60s. And so the US, okay, started to do something very dodgy, which was they started to, because at that time, you have to understand for international trade, countries were accepting the dollar. Okay, hear me very carefully. We're accepting the dollar as payment, but it was only a receipt that they could go to Fort Knox or somewhere in the US to be able to claim the gold that they've earned from international trade in imports and exports. So in essence, the dollar was just a receipt to say that we have this much amount of gold. At that time, I believe when the standard first came out, I think 1 troy ounce, yeah, 1 troy ounce of gold was equal to roughly about $33 approximately. That was what the value was. So for every $33 made or spent, that equal to 1 troy ounce of gold. Okay, 1 troy ounce. So this is what countries were doing. So countries like France and other countries around the world could engage in international trade after the Bretton Woods system was established. And this Bretton Woods system that we had established was allowing for a lot easier transactions between countries because they didn't have to carry around dollars. Carry around gold. They could just carry around dollars, which was a representation of the gold. And at a later date, at a better time, they could collect it. Okay, so it made trade easier. It also saved a lot of money because, of course, if you're carrying gold, there is the risk of security. There's a lot of logistics that have to go around moving gold. So it kind of was a thing where not that the US was the only place that had gold, but Fort Knox was the main place where you could get your gold for dollars. And this is the system we had in 1971. Now, even before 1971, the first country to start to suss out what the US were doing was France. They noticed that the dollar, that according to the data that they had, the US seems to be spending more money than is actually in existence. And what was happening? What happened started from 1913 when the Federal Reserve was created. The US was spending more money than they actually had. Now, remember the equilibrium. You shouldn't be able to spend more money than you have. If you have 100 tons of gold, then there should be an equivalent amount of currency. If you're spending more currency than there is value, then you're in a bit, you're scamming the world, in other words. Okay. Now, there is also a second side to this. This system of a balance between gold and currency was to create an equilibrium for exports and imports. What do I mean by this? So if you're a country that was exporting a lot, or you're making a lot of sales and making a lot of gains in gold, the more gold you have compared to your currency, which is not a bad thing, meant that the currency strength was higher. Okay. So the currency strength of that native country was higher. Now, you can have more currency than gold also. So if you were buying a lot and you were buying a lot of things, you're a country that imports a lot, okay, then your gold will be going down and your currency will be losing value. And so to strike that equilibrium, this is why the gold currency equilibrium is so powerful. It forces the country into producing something. So if it encourages productivity in a healthy way to restore that equilibrium. And so this is what we had now. When the printing machine was unleashed in 1913, okay, now the reason why the Federal Reserve was created is because of 1909, which is what we call the Knickerbocker situation. And we had very similar situations of market manipulation in other aspects. But really, the Knickerbocker situation caused a big stir, and New York was in a riot and a protest because of the situation that occurred. And as a result, the US government created the Federal Reserve to be able to step in to so-called regulate and serve the people to alleviate crises of that nature. Okay, so this is what we saw. But now that you have this picture in your mind, okay, when the gold standard system was removed, ever since 1971, you have to remember, if we have the currency, so we had gold, and let's remove all of our markings here. So let's look at the infrastructure of what currency is. So the notes that we love. So here is gold. All right. I'm going to put gold right here. Now, after gold, what the system should have been is the dollar. And then after the dollar, it will be all the other countries that are backed by it. So in essence, The strength of other countries' currency was in relation to the dollar, which was in relation to gold. Okay. So the pound, say, now the yen was a bit later, the euro was a lot later, but let's just say I'll put the yen here. Okay, and etc. Put the euro. This was what the system was supposed to be. Now the euro came out quite late, so for historical reasons, I wouldn't put that there. But you have the picture in your mind. This was the system. But now, as soon as gold was removed, the dollar wasn't backed by anything. Now, you probably heard me say in my live sessions or talking in my live sessions about something called the petrodollar, which we'll go through in a moment. But I just wanted to see the understanding of how this wealth transfer happens, because I know a lot of people say it, but it doesn't really make sense most of the time. But I'm here to break this down for you to understand. Now, when the dollar was not backed by anything, okay, and as many dollars can be printed as possible, in other words, the total supply became unknown. The maximum supply of dollars, nobody knew what that actually is. And because of that, this is what we have here. And is this word, the D word, devaluation of currency. Now, because the dollar can be printed as many times and the supply of it can be expanded as much as possible, all right, what we see here is that the dollar slowly but surely is losing its value over time. Okay, because it's not backed by gold and there's not that stability there, the Federal Reserve has the ability to print as much money as it wants, so they can create dollars out of thin air. Now, the system for this, I've called it the triangle of death. And the triangle of death is very simple. We have the dollar, we have the government. Okay, now specifically, and then we have the treasury. So treasury, Federal Reserve. I put the government as in the group of treasury. So if the government runs out of money, what do? They ask the Federal Reserve to print out more money. When it's approved, the Federal Reserve sends the dollars to the treasury. Okay, and now the government of the US has put themselves in debt to the Federal Reserve. Now, when they put themselves in debt to the Federal Reserve, what happens? In order for the government to pay back this money, they create something called government bonds. All right. So if you've ever wanted to be a person that lends to nations and does not borrow, this is exactly how it happens. When you buy government bonds, you're essentially buying their debt because they need more money for something. Now, there's different types of bonds that can happen, but sometimes some governments have money, but sometimes they just need extra money for a specific project. Like, for example, the Olympics. They may say they want to raise 420 million, so they issue bonds with a payback, usually with a payback time and a payback percentage. Okay, if you give them money, and so then you give your money over to the government, and then they do their job. All right. So now, in order for if the government this is a question you have to ask yourself, why I say the greatest wealth transfer is on its way. If the government didn't have the money to pay the first dollar, when they loan to the Federal Reserve are going to give them the money, of course, through the treasury, but then they're going to give the money to them at an interest rate. Now, put it this way. If the Federal Reserve is responsible for creating dollars, the government didn't have the dollars in the first place, where are they going to get the dollars to pay for not just the dollars that they borrowed, but the dollars that the Federal Reserve wants in return? Okay. So if they can't pay what they already are borrowing for, how are they supposed to pay back the money plus interest? So this is why I say to you that when it comes to the dollar and the infrastructure that we have for the future, every currency since 1971 is in the same position. All right. This is why, for example, gold as an asset, if you're wondering why gold is a protector of your wealth, this is one of the biggest reasons why. Okay. Because over time, gold doesn't change. Okay. It doesn't. As an element scientifically, it doesn't change at all. It doesn't denature. It's the most inert compound. Okay, or I shouldn't call it a compound because that's chemically incorrect, is the most inert element that exists on the periodic table. Okay, apart from, I guess, noble gases, but is very, in terms of a metal, it is something that does not react with anything and therefore is stable. And this is what's important. It has scarcity, it has a known supply, whereas the dollar has no known supply. Okay, so this is how backing your or protecting yourself with gold happens. So if you were to buy gold with dollars, okay, you've put your wealth into gold. as the dollar devalues, gold will not devalue the same way. Now I'm trying to hold myself back because there's so much to say, but I hope you get in the picture. Now, what is the difference between this and Bitcoin? Now, if I was to take this off here, let's talk about Bitcoin. Now, Bitcoin is very often likened to gold, but they call it digital gold. And there's a very simple reason for this. Now, Satoshi Nakamoto, whether he, she, a group of people, we don't know. But what is Bitcoin? So Bitcoin has a limited supply. Okay. Now, the limited supply is known to everyone. Okay. It's probably even better than gold because the limited supply for gold is, I mean, it's theoretical to a degree, but there's a give or take to it. With Bitcoin, it's very clear. There's only ever going to be 21 million Bitcoin, all right, that will ever exist. No matter what you try to do, there's no government, there's no coder, there's nobody that could ever be able to print one more Bitcoin than there will ever exist or print one less. There will only ever be 21 million. Now, because the supply is locked in and we know the specific supply, there is scarcity because there are around 7.4 billion people on the earth. Okay. And there's only 21 million Bitcoin. All right. Now, because Bitcoin has this ability or has this limited supply, it's not the only thing that Bitcoin has, but because it has this limited supply, it makes it very scarce. All right. And because there's no control, there's no ability to print it, it makes a very good replacement for currency as we know it. Okay. With Bitcoin, you can do peer-to-peer payments. You can pay for things. All right. You can store value in there. So you can, in other words, you can convert one currency into Bitcoin. All right. Store of value. So these are the features that make Bitcoin what we call digital gold because it has very similar features. Now, the only difference between Bitcoin is that Bitcoin is a lot more divisible. In that sense, you can have 0.00025688982 Bitcoin, but you can't actually have that with gold. Gold doesn't have the same kind of divisibility. Okay. So this is one thing that makes Bitcoin a very powerful asset. So this country adopting Bitcoin, all right, they've got 550 Bitcoin. Now, assuming that there's only ever going to be 21 million, which there will be, over time, as more people try to buy Bitcoin to have ownership of this, the value should go up. And so over time, what President Bukele has just done is help people to have a store of value outside of the normal financial system. Now, Bitcoin is not controlled by one individual party. Okay, it has a blockchain which is public, which is another important thing that everybody can see every transaction. Okay, when it comes to the transactions with central banks, nobody knows what actually goes on apart from what comes up on the balance sheet. Now, I'm trying my best to hold myself back because I could talk about this for hours, but I just wanted to understand where Bitcoin is and why this is so powerful. Now, the dollar is dying, guys. Every single year, more dollars are printed than the year before, almost, or the dollar is devaluing, and more money is being printed as time goes on. All right, now there's a really cool website, and I'm actually going to type this in here for you guys to see for the moment. Let's go right here. And the website is called US Inflation Calculator. So the US Inflation Calculator, what it does is it calculates inflation from 1913 to 2021. Now, the reason why it's from 1913 is because that's when the Federal Reserve was created. The moment the Federal Reserve was created was the moment that the dollar became something which can be printed at any time. In other words, because I would say one of the policies or one of the tools that the Federal Reserve had was the ability to print more dollars in the event of a crisis to reinflate the economy, to soften the blow of financial situations, in other words, because this is what we had with the Knickerbocker situation. There wasn't any money printing available. So how does this inflation calculator work? It tells you how much buying power. Now, for many of us who, are handle money, which I'm sure we all have, and many of us that do have a bank account and things like that, we have a savings account. Now, I'm going to give you a demonstration here of why Bitcoin is so powerful. All right, before we continue. Now, let's say you have a savings account of 2%, which means that every year 2% per annum anyway, as long as they keep it the same. So into after a year, if you have, let's say 10K, I'm gonna put 10K here. In 1 year's time, in the new financial year, you're gonna receive 10,000, and I'm using pounds because I'm from the UK, $10,200 because 1% of 10K is £100. So 2% will give you £200. Now, this interest rate of 2%, okay, this when everybody sees this, and this is the deception that you need to understand. Just because you're earning 2% nominally doesn't mean that you've earned 2% in buying power. Okay, what controls economy and what controls goods is the buying power. When you convert one currency to another to purchase something, how much you get for one currency to another, hence why I love Forex so much, and I'm a Forex trader primarily, is for this one reason. Now, I'm going to explain this to you by putting out inflation. Now, if inflation is 3%, okay, which means your buying power, or if you want to put it in another way, the ability to purchase goods, because currency, remember, is designed for you to be able to make transactions. The whole reason why paper existed in the beginnings, even back from the days of the Egyptians, was to be able to create a way to represent monetary value in a very easy way. Okay. This is what it was created for. So now, if inflation is 3%, all right, that means after 1 year, okay, so in 1 year, the £10,000 you have here, nominally you have 10,200, but in terms of buying power, which means your ability to buy goods and services. Now, how does this make sense? In other words, how you'd measure this is that if you were to pay, let's say, £10,000 worth of groceries in year one, if inflation is 3% and your APY is 2%, then you have to do 3%, take away the 2% that you've earned, okay, which equals to the 1% here difference, all right? So in other words, your inflation is higher than your interest rate for the end of the year. Now, after that financial year, this 3% means that the 10,000, okay, that you put in minus 3% minus 2%, you've lost 1% value, which means that in terms of your buying power in the new financial year, you can only buy, I'll put the numbers here, £9,900 worth of the same goods. So in other words, you lose £100 of buying power. Now, it might not seem much with 10K, but if you have 100 million, okay, then the numbers become drastically different because you're losing buying power due to the fact that inflation is higher, okay? So why is this happening? The more money is printed or the more dollars in existence. So the balance between supply and demand, this is where it starts from. So if you want a lesson on trading, this is where we start. On the left-hand side, I'm going to put supply here. I'm going to call it sup, and I'm going to call this right side demand, okay? Now, supply and demand, when there's an equilibrium, the prices will be stable, okay? If there's more demand than supply, the prices go up. And if there's more supply than demand, prices go down. Now, this is the same thing when it comes to any currency. If there is more currency being printed in a country, or there's more availability of a current country's currency, there is more supply. The more supply or the more amount of currency in existence makes the currency weaker. It devalues it because the scarcity goes down. All right. The higher the scarcity of something with monetary value, think about it, guys. Antiques, NFTs, things that are one of one, five of one, cars that are there's only 50 ever been created and ever will be created. That scarcity causes the price to be more because there's a higher demand than there is supply. Okay. Now it's the same thing with currency. If there's an increase in supply over time and is not balanced out, then the currency becomes weaker. And so this is what happens with inflation. So you're not actually earning anything really, even though in essence, this 10,200, all right, is the same as if you were to pay for things that you paid for exactly the same way last year, it will equal to £9,900 worth of stuff. So it'll be £100 short. If this was 100 million, so now we're timesing it by large amounts of numbers here, we're looking at a much larger loss of £1 million of value. Now, if you're a millionaire, why does this matter? If you're worth 100 million, and because of inflation, you lose $1 million worth of your buying power, I don't think you're going to be a happy bunny that you work so hard for. And this is what inflation really is about. So I would love you guys to use this calculator, but I just want you guys to see here. Look, in 1913, if you purchase an item for $1 in 1913, all right, in 2021, you would need $27. So what does this mean? This means that right now, the dollar that you're holding in your hands or in your account or has 1/27th of the value that it has right now. So 1/27th of the value is a very, very tiny percentage, right? But 1/27th of the value that it had in 1913. Why? Because of this system of money, all right? This system of printing money without backing it with actual value is where we are right now. Okay. And Bitcoin offers an escape from this consistent currency devaluation because over time and in the future, guys, things seem to be stable, but coronavirus was just the beginning of the destabilization that many people are experiencing. There's a lot more to go and a lot of things are going to take place, unfortunately. But Bitcoin offers the opportunity for you to have another way of having access to economy without inflation. All right. In fact, Bitcoin is a deflationary asset instead of an inflationary one because of the mechanisms in place. Because every single 4 years, known as Bitcoin halving, the amount of supply of Bitcoin is halved. So this halving of supply, but increase or even consistent demand will over time cause the value of this asset to appreciate in price and not to devalue. Okay. So in other words, if you're in Bitcoin, you're earning value or you're gaining value instead of decreasing in value. All right. Now, someone asks, what happens when the last Bitcoin is mined? When the last Bitcoin is mined, then you're going to have a system that will still only have 21 million supply, and people will have to be able to, or people will trade, in and out, or make transactions in and out of the system between Bitcoin and whatever currency is in their native country. So this is why I'm saying to you guys that you have to be very, very careful with what you say before you. Now, I know a lot of people are not fans of Bitcoin because they've heard bad news. But why do you think you've heard so much bad news about it? Why central banks have nothing good to say? Why most of mainstream media has nothing good to say? Why do you think? Because this is a direct attack on a broken system. Because in essence, the system I showed you, the triangle of death, as I call it here, if I draw this triangle out for you right here, you have the dollar, you have government bonds and government. I'm going to put gov here. And then you have the Federal Reserve. This system is a system of inflation because the next question you have to ask yourself is the people that the government basically in essence borrows from and gives them bonds, they also promise them a return. So how are they, if they never had the first dollar in existence, how are they going to pay back that first dollar in existence with more dollars if the first dollar exists from a loan? I know it sounds like a tongue twister, but just think about it. Okay. In essence, this is a Ponzi scheme that is about to crash at one time. And I can tell you for a fact that the dollar is going to crash very badly in the future. Now, I'm leaving a timestamp here. This is the 9th of September, 2021. And Michael said the dollar is going to devalue seriously over time because this system can only last for so long. Now, what keeps the system afloat? A lot of it comes from the government bonds because people go to the bond auction. Now, just like you go to an auction for a house or for some sort of thing of value, it's the same thing when it comes to the government bond auction, but it's a little bit different. But countries buy these government bonds, and the buying of these government bonds supplies the government of the US with money to continue this system. Now, all it needs to take right now, okay, for this system to crash, really, one of the biggest things is, of course, a loss of confidence in the dollar. And number two, is going to be what happens when nobody turns up to the bond auction. Now, during the coronavirus period, the Federal Reserve, now during high periods of financial stress in an economy, the Federal Reserve will step in, okay, to do something called OMO. Now, if you've been on my other channel, okay, the Wolf Group Academy channel, the company channel, I've talked about OMO or open market operations in deep detail, okay, or at least in some good detail. Now, open market operations, what happens? When not enough people buy these government bonds, the Federal Reserve do what we call asset purchases, and they go and purchase these government bonds, okay, because they want to stabilize the supply and demand. If they don't, and this crashes, this whole system crashes, and the dollar goes into the whole world will go into a state of panic, because if the dollar starts to crash, which is still the world reserve currency for many other currencies around the world, everything is going to go haywire. Okay, the price of gold will go through the roof. The price of Bitcoin will go through the roof. And to be honest, gold and silver and Bitcoin and cryptocurrencies that have a limited supply specifically, primarily Bitcoin, are some of the only assets left, okay, that exist as the store of value. Now, and even more importantly, Bitcoin is the only asset, I repeat, Bitcoin is the only asset that is existing outside of a centralized system or a government system. In centralization, guys, what does centralization mean? I'm going to clear this up for you to see. What does centralization mean? Centralization means that you have the few. I'll put this in here. The few, okay, dictate to what happens financially to the majority. Okay. Decentralization is a completely different picture. All right. So in other words, from this few to majority paradigm, we have a special word here called monopoly. Financial monopoly is what many people experience, okay? There are barriers to entry for finance. There's some countries that don't have access to the same amount of financial resources as others because of this financial monopoly, okay? Many people are excluded from the world economy because of this reason, but Bitcoin brings people together. Why? Because anybody can access Bitcoin that has an internet connection. And in 2021, every country in the world has internet. Thank God for that. All right. So what's decentralization? So in decentralization, people are connected, but the people become, okay, the connection with each other through peer-to-peer stuff. All right. And what governs everybody is code. Now, there's a term called code is law. And this is the fact that code written on a blockchain is immutable. It cannot be changed. Okay, which means that the laws that are set in place for healthy and fair economy are done through code. All right, and peers on both ends, they don't even have to trust each other, but the code in between settles the matters that happen on the blockchain. Okay, now of course there are developers or there are people who are who contribute more, okay, to the system. But this is what Bitcoin exactly represents, and this is why Bitcoin is so powerful and is the antithesis to everything of centralization. A system like this allows for freedom. A system like this, you're controlled. And this is why it's not a surprise that, as we see here, Bitcoin crashed on the first day of being released in El Salvador. I respect this man a lot because he's revolutionary. And he's literally, El Salvador means the savior. They've literally become the savior of the world potentially by opening the eyes of the world to what's taking place. Okay. So this is a very important thing. So how does the wealth transfer come in? A day is coming, in essence, guys, when currencies are going to fail. All right. It's happened in the past, it's happened in the olden days, and it's going to happen again. There's going to come a time where digital money in the form of currency is going to fail, apart from things like Bitcoin, because essentially the dollar at the moment, unless it goes back to being backed by gold, has built castles in the sky for exactly 50 years from 1971. Okay. Now, August 15th, 1971 is the 50-year point for August 15th, 2021. It marks the jubilee or the 50th anniversary when the dollar began to die seriously and when it came off the gold standard system completely. All right. So why am I saying this? In this 50-year period, yes, the Bitcoin has been through quite a few things, but when you look at the economic infrastructure and what it means for a country, somewhere like El Salvador and many of the poorer countries who are very dollarized, as we would say, if the dollar was to crash by 90%, they're already a poor country, but all of their wealth will be gone within a day. Okay, but Bitcoin allows them to protect themselves, okay, even from inflation. So countries like Venezuela and Argentina, who have crazy inflation, and some of them are, and I believe Venezuela has dipped into hyperinflation almost, where a monthly salary, okay, that used to be able to do shopping for a month can only buy you a burger and chips and a drink. I watched the interview. Bitcoin is the only financial system left that will be able to save a country from running aground and losing all of his wealth and monetary value. So now you understand why the wealth transfer is so important. And this is why cryptocurrency, now timing is so important with everything. And I'll show you the markets in a moment. I promise I will. But I just wanted to understand that in 2009 is when Bitcoin really came to fruition. Now you have to understand in 2008 is when we had the financial crisis where now specifically this financial crisis was caused by the greed of institutions, especially in America. Okay. Because we had the subprime crash where people were able to get a mortgage that just came out of prison, no credit score, just because it was so lucrative as a business. And when the house of cards fell apart, many businesses, many places had to close down. And then during 2008, Bitcoin was theorized because during that time, money was printed out, but it wasn't given to the people. There was a mass amount of unemployment. A lot of people lost their wealth. A lot of people who were millionaires became broke in a day. You know, a lot of the millionaires had to restructure themselves, and some have never recovered. Some even committed suicide. That's how serious it was. Okay. Now, the only people that got bailed out, you can guess it already, those big centralized institutions who are close to the government's heart, you know, but the people who suffered terribly, okay, during this period in 2008. So Bitcoin came out in 2009, and I believe that the first listing was, I believe, around October 2009, October 10th, 2009, somewhere there. That's the first time Bitcoin was listed, and 1,508 Bitcoin equal to $1. So now that we've seen the history here, let's look at the correlation. 12 years later, just 12 years later, in 2020, guys, we had another financial crisis, very different in nature. This one, money was printed, but this time it was printed and given to everyone. So the supply of dollars, the supply of currency into the broad supply, or what we call broad supply, was a lot larger. So now we have a very high amount of inflation on every currency around the world. And then coming into 2021 is the first time we've seen El Salvador, okay, put Bitcoin as a legal tender. So can you see the correlation here of what's going to happen? So really, in terms of Bitcoin, if you've never seen why Bitcoin is a wealth transfer and other cryptocurrencies, the like, this is why. Now, it's not the only asset that, you know, is available, but why I'm giving this to you now and I'm giving you the prerequisite is that because of what El Salvador has done, this is probably the penultimate war, one of the last major wars, okay, of human monopoly. Okay, when the internet came out, let's even go further than that. Let's go into the 1800s. When telegraph came out, you have to understand that in the 1800s and even before that in the 1700s, knowledge or was only allowed for the elect few. So people weren't allowed, people were made illiterate by centralization already. So the elites were the only people allowed to read books and learn how to read and etc. Okay, and then that phase was broken and education became available to all. Next, we had, when it came to news and media, there used to be a time where there was what we call the town crier, which is a very well-known thing. I'm sure you hear it, hear what the news is. And why was this very bad? Because the news was one-sided. What the king or the ruling power or government of that nation wanted the people to hear, that's what the town crier gave. And because the town crier is the only person being authorized to deliver the news, there was mass manipulation of the mindset of people, okay, and control. So once the telegraph came out and the printing press was released and people could become their own news source, that centralization was broken, okay? Then when it comes to the internet, all right, one of the other centralizations was by geography. Geography was a resistance for connectivity, for human beings to connect with each other. And then when the internet came out, what it really did was to destroy isolation in that sense and allow for people to connect everywhere. So that centralization was broken. Now, the final centralization to be broken off of mankind is the monetary monopoly that comes from the central banks. So this one is the biggest one and the final one before human beings will, for the first time in history, have freedom to be themselves in their full expression. All right. Now, centralized institutions do not want that because they want to have the monopoly over things. And so do certain people. I don't want to say the rich because being rich doesn't mean that you're a bad person, but certain people in power. So I would say to you guys, expect a war when it comes to Bitcoin. Expect a war with crypto. This is why crypto has had such a crazy war and it's taken a lot longer to take off than other industries. All right. This is the major reason why. Now, because of this move here and what it could potentially mean, that we may have a restructuring of how governments around the world behave when it comes to money, I don't think the war is over. I do think that Bitcoin potentially could even drop even further. And I'm going to back up my evidence right now and show you my charts. Now, I'm going to the charts here because I want to show you the timing and to understand how serious this situation is and why you should be paying attention. Okay. 2020 and 2021 are not normal years. Okay. This is something that, as I said, is becoming very serious. And if we don't pay attention, guys, you don't want to get left behind. All right. So I'm going to clear all my drawings here. And I already have Bitcoin set up here. So I'm going to go through the technical analysis, which I know you guys know me for. I love to analyze and look at the charts. But I want you guys to see something here as to the timing. You know, I told you the charts are like a prophecy to me, that if you read it well, you understand exactly what's going on. I'm going to use the weekly time frame to explain this. So on the weekly, this point right here, this algorithmic level, I've been talking about it for months, that when the price gets here, there's going to be a reversal. I don't know what the reversal is going to be about, but the price is going to definitely reverse from being bullish to being bearish. It's definitely a fact. It is going to happen. Okay. Now, funny enough, the moment that the price touched this point was what? The announcement of El Salvador's news. This algorithmic level, money here, smart money has been put here, or I say smart money anti towards Bitcoin has been waiting for this price point for many, many months. And when the price finally hit this point, we had this very strong short. That's why I was calling a short from this point beforehand. It's just that the El Salvadorian news fit perfectly to give a reason for why the price should sell from here. Now, I've been analyzing Bitcoin's chart for a year and plus to observe how this chart is. And specifically, if you see these blue lines here, these gaps that we have now, these gaps in prices are where liquidity gaps happen for different reasons. Sometimes it happens because the broker's price feed cuts off and then comes back on. And so there's missing data. There's other times where the market in general might create a gap because there was a price feed issue. But there's also another type of liquidity gap, which happens when a bullish movement happens or a bearish movement happens, and there's not enough liquidity to support that movement at certain price levels, the price skips. But then on the market order book, the market book order book knows that it needs to fill these spots at one point or another. Now, a perfect scenario to fill these gaps. Now, I've looked at the price feed all the way back even to 2018. And I can assure you that looking at Bitcoin, number one, this is the rationale that I have. IC Markets is primarily a Forex broker. That is what it's known for. It has no interest or it doesn't gain any benefit really from lying about its price feed. These gaps right here, looking at all of the price now, especially when a new day or a new month happens, there can be gaps because, you know, price feed stuff. But I've analyzed all the candles going all the way back to 2018. And anywhere there's been a gap, all right, has been filled. As you can see along here, we had gaps back in 2019. They've all been filled. There was a gap here when we had this market crash happen. Now, so this is a good example. So this market crash that we saw in 2020 in March, there was a gap in price that was left as the price dropped down to these lows right here. Now, this gap in price is because of a liquidity imbalance, because we had a very strong amount of selling, but it wasn't an equal balance of demand to be able to fill out this area. And there wasn't enough liquidity to support this sell range between here and here. So we had a gap form. Now, the market on its way back up has filled this area, and we've seen a continuation in the price. Now, I want you to see this with me and understand exactly what's going on. There are gaps that have been left on the price back down to 9,633 that haven't been filled. Now, we need to put the rationale together for me to understand why the greatest wealth transfer is here. But it will come with Great War. Now, if this algorithmic price point has hit here and the price is starting to sell off, which I believe is going to continue, what would be the number one thing that, or the final straw that these institutions that are against the freedom of people, in essence, and are full of greed, what would they most likely do? The best thing that they could potentially do is to push the price so low and hurt a country like El Salvador, which is already poor, which will create a very good news piece as to why Bitcoin should not be accepted as legal tender. Now, that scenario will allow for these gaps to be filled. Now, this is my own suggestion as to what I believe may happen. But if this is the way that the price is going to go, all right, then at least we have gaps all the way down from 25 back to 9,633 that haven't been filled. So my question now is, and I want you guys to take a screenshot, keep this in your mind, is that what if, and this is a what if because anything can happen, what if they use this event, okay, or other events that are about to happen in the future to crash the price back down to fill these gaps? And once these gaps are filled, and then we'll see Bitcoin rise. Now, if this happens, it will hurt Ecuador to probably an irreversible place. It will probably put 95% of countries off of using Bitcoin as a store of value. If this was to happen, there'll be so many riots and protests that it probably might destabilize El Salvador, and they won't allow for this to happen, or they'll go revert back to the dollar. Remember, it's a dollarized system. So this is my thoughts that I'm seeing on Bitcoin, guys, and this is why I'm saying to you, you have to keep your eyes peeled. Now, I'm sure you guys are probably staring head first inside the screen like, oh my God. But this is just the truth, guys. This is where we are. And this is how serious the war is. So finishing off, I just want to share with you one trade that I'm looking at with Bitcoin that I'm expecting the price to provide for us. And I'm going to share it on my charts here. Now, you're in luck because I shared this with my students too earlier on. And I'm going to break this trade down very simply. It's a very simple trade for a potential long. All right, so let me switch over to Hugo's way and let's have a look at what the price is doing. So the price has already done the move here, but we've seen the price go for the high of the previous day. And the stop losses above this area are nested right about here. So the highs above this area, we've just had an induction for a short, and we're seeing a very strong short play out on Bitcoin. All right, now if this short continues the way it should do, then there is a potential that we should be seeing a short movement that should last back down to some lower lows. Now, I told you, the reason why I'm more convinced that Bitcoin is probably going to sell off and we're not done yet is because I said it during this period of July. Every cryptocurrency reversed on the 20th of July, and every Forex pair that's paired to the US dollar did that August 20th. So we had a 2020 move. Now, this 20th of July movement, when the price took off, it left a double bottom here, or a pool of liquidity, which is very strong. Now, this pool of liquidity will cause the market to have a magnet towards it. And it's intriguing to me that every other equal low that the market has ever formed has been run. And so there's a very high and strong potential, guys, that the price is going to run this low. And if it does, I expect this price to get back down to 29. So that means there's an opportunity. So I'm going to go for the short and then I'll go through the long scenario. Now on the long scenario here, remember this supply flip zone here? This supply flip zone is responsible or as an intermediary between when the price crashed from these highs around 60 down to 44, and then from 44 at this supply zone down to the 28, 29 area. Now, when the price broke here for the first time since the 9th of August and had the return here, we had a reoptimization of supply for demand, and the price has reached this area right here. Then since we've had this reoptimization, in one day, the price has come back here. So potentially what we're seeing is an A to B and a C movement. And that means that the long is going to be sweet and we continue and everything's fine. The other side to the story is if we have a daily close at any point in this market beneath this area, the market is signaling to us that we've dropped back beneath areas of supply that the market hasn't, well, the market was in during the last crash that we saw. So for that reason, guys, if the price breaks beneath here and returns, our sell trade will be from here. And we should be looking for a trade down to about 2,800, which if you use IC markets gaps, we're looking at about 28,242 or something along those lines. Now, if you get a good entry, and even if you got to the low, that's £1,000 of a drop. So I've given you the trade idea here, guys, already. You want to get yourself prepared for that. Now, the other option here, and I'm going to the H4, is that I believe Bitcoin should be giving us one more long at least. And the real test of how far the price is going to break past will be at this area of demand right here. But what we've had on the H4 on Bitcoin is interesting. On the H4, there's a supply zone that's been formed right here. And the price has closed beneath it with 2 candles, so we cannot even use it anymore. So this break of supply to me that we can use, excuse me, but this break of supply to me, if in the next 30 minutes, and this is time sensitive, so be prepared. In the next 30 minutes, if this candle closes beneath this supply zone, then we're going to get a little bit more of a short. And the next point that we'll be looking for some sort of long would be here. But if the price closes inside of this area, then as I've said to my students, as the stop losses of the sell traders have been run right now, then we could have a potential push back up to 51. All right. So this is the two sides of the story. And I'm going to be watching very carefully. But for the moment, the major reaction for now is the stop losses that have been run over here. And I'll be very intrigued to see how the price continues from here. So I'm going to leave you guys to it. I'm going to probably have to do this in series because there's so much to unleash and time has really gone fast spent. But I hope you guys enjoy it. Please put a thumbs up because I want as many people to hear what I've talked about today. I'm only warming up. This was not even planned. This is just something I'm sharing. I hope you guys enjoyed it, and I'll catch you guys